We are here, we are here, we are here on this amazing day. Okay, everyone, this is Cam Jones, FX Daily Analysis, and we are marking up Fcnca. We are on the 12-month time frame. Price action, last candle to the right-hand side is a bullish green candle, push out of area of support from the second to last candle. Current price is sitting at 117021. Let's start off looking for overall structure, higher highs, green and red. So highest highs stopped at near the numbers of 83, 1.25. Let's also tag that lowest low of support, which would be red and green. They're in the numbers of 17.34. Let's also take a look at what's going on in the market now. So we can see that price action broke out of the highest high structure of that green SR line that we created going across the screen. Price action broke, second last candle support, third last candle was a push up in that area. So to show you guys what happened, so if we think about, even if we add a midpoint in that middle, market retest the midpoint, pushed up to a following level. So if we start at the midpoint or start here, you can see that first, second, third, and third leg will be the second last candle, and then fourth leg will be the push up. So the incline double bottom that pushed that market from the midpoint to the breakout of the overall highs structure. Now we got to figure out what's happening at that area and how far price can push up further or drop down. So market drops down, it can create a pattern. So we waiting to see what's happening here as we walk down the time frame. A pattern that can be identified as an M pattern. So it could be it can form a double top as you walk down the time frame. Or if the next candle forms, it can form a bearish red candle to work its way down. That will be a total of 2 pushes to that top, or creates that double top. And you'll see if it follows up a retest or catch some support and then push back up. But so far, as I said before, we have the break of that mark of the previous size. So we're looking for where the market's headed. So market price spiked up to overall structure, or I should say overall highs, nearing the numbers of that price action wick at 1251.12. So what we're also going to do is we're going to add the midpoint near the numbers of 1012.12. Now let's read the market to see what we see now. So what we're looking for as we walk down the market is, we know that market broke that higher structure, pushed up to new higher highs. Now we got to figure out what's going on. We grab the area of that resistance. We using the highest high of structure for the support, and we have that midpoint. So once that market pushed up to that high, now we're looking to see if it's going to follow up with another bullish green candle 12 months later to push that market up, or I should say 7 months and 20 days later to push up with the following candle. Is it going to consolidate sideways, or is it consolidating sideways? We do know that market did lose some momentum, so that means it tagged the area of what? Second level highs in that area, and we also have second level lows. So that market did break up to the high, came back to retest that second level highs. Now, is it going to respect the second level highs, and that'll identify as the push, the retest as price action came back down? And is it going to push out with the following, not the following weekend, that'll be 7 months 20 days ahead. So is price action going to gain momentum within this candle to push right back up to previous highs and push above and beyond the areas of the highest highs of the overall market price? Or is it going to retest levels or work its way back down, so it can lose more momentum to that high, leave more of a spike up? Green structure of that candle can work its way down. So we can receive consolidation near that top half as we walk down the time frame. So we're trying to figure out what's going on as we walk down. Walking down to the 6-month time frame, so price action on the 6-month time frame is a bullish green candle, a huge bullish green candle. We can see that support leg with the price action candle towards that previous side. So what happened is when price action tagged the area of resistance, it wasn't able to break on this side here with the fourth to last candle, fifth to last candle, sixth to last candle. So it came back to retest the a level. So if you think about it, we know we have, this will be high, low, mid, second level high. So we can see market respect to second level highs in the green structure pattern. So this is where we identify that incline W for that first, second, third, fourth. So that first leg tag, first and second leg tag the midpoint of that overall structure, pushed up to the highs, retested and fully broke out for that double bottom. Price action still leading as a bullish green candle. We see the retest, but we see where the market lost momentum. So we have to figure out what's going on in the top half of this area as we walk down the time frame. Walking to the 3-month time frame, so price action on a 3-month time frame, bullish green candle, spike up to the high. So lost a lot of momentum. We see it tagged a high. But what's going on in this market as we got to a 3-month time frame? Price action candle can change. It can push up further. It can push down. It can stay the same. So for right now, we see a long spike up to the high with the price action candle, and we see a long spike up to the low of that second last candle. So when you see these spike ups to the high, spike up to the lows within these candles side by side, or maybe a candle in between there, that's considered a huge doji. So we're going to see if it's going to perform as a huge doji as we walk down the time frame. But remember, this is a huge doji, what's considered basically that market is in a huge consolidation. Okay, so it can reverse, it can drop down, but we do know we have the break of that overall structure. Is going to retest the overall structure to work its way back up. So right now we stand hanging out at the high area to see what's pattern performing, and we can see it lost a lot of momentum. Monthly time frame, so price action monthly time frame, same type candle as we see in a 3-month time frame. Second last candle is a doji spike up to the high, so that market is retesting, the second last candle is retesting the second level highs or the midpoint between the red SR lines. So it created that momentum. So if you look at where it came from, when price was below structure, it created that first, second, third, and then pushed out. Second last candle is a retest, and then market price pushed up, and we do know it lost momentum. As once again, we still trying to figure out what's happening. Is it consolidating sideways? Is it going to work its way down further? It's going to push up. Weekly time frame, same candle, bullish green candle, spike up to the high, tag that area, lost momentum, and we can see why it came up to that high with the price action. Midpoint SR line pattern was formed at that area. You can see the first, second, third, and market pushed up with the fourth to last candle, or price action candle, which is that double bottom, and then we can see that lost momentum. So we still try to figure out what's going on at that high. Daily time frame. Same style candle, different color. So we have a bearish red candle spike up to the high. So we can see that that market lost a lot of momentum. So it's coming down. Also, there's a gap in the market. So to break this area down, what are we looking for? We looking to add the midpoint so we can see the area of where price is headed to. We can see the patterns came from. So we have a first, second, third, fourth, retest, one. So that's a double. So this is the structure of the double bottom and a retest, or a triple bottom. We have a retest with the sector last candle, and then price action just gapped off. So think about it as a bullish green candle pushing up, and then that price action candle is coming back down. So as the candle is missing because there's a gap in the market, so we can see prices headed back down to that midpoint from the break-in retest. Walking to the, okay, let's go back to the daily time frame. Let's also take a zone and place it around that last candle of the market, or excuse me, second to last candle of the market, so we can take a look at, see what's going on. Headed to the 4-hour time frame, so let's break down structure. So the 4-hour time frame in that zone area, that's the retest. So market broke into it, retest with the second last candle price, and there's a gap in the market that pushed that market up. Market spiked a high, lost momentum, came back to retest near the midpoint levels as we talked about. Think about it as a big zone being that area. 3-hour time frame, same as well. 2-hour time frame, same as well. Price action, same candle. Last few time frames, and now we on the 1 hour time frame. Okay, guys, FC